The analysis for the current session requires us to look specifically at the Chicago Mercantile Exchange futures data, because there is a massive unclosed gap that often acts as a magnet for price action. But the current buying pressure is so intense that the market seems to be completely ignoring this traditional technical requirement. We are observing a significant divergence in the cumulative volume delta, which tracks the aggressive buying versus selling at the market price, and currently, the delta is heavily skewed towards the buy side, specifically on Coinbase, which indicates that American institutional investors are buying spot Bitcoin aggressively, while retail traders are selling. The relationship between Bitcoin and gold is also breaking down, as Bitcoin is acting as a high beta risk asset rather than a safe haven today, which is actually bullish in a risk-on environment because capital is rotating out of defensive assets and into high-growth digital assets. When we examine the Mayer multiple, which is a ratio used to gauge whether Bitcoin is overbought or oversold relative to its historical movements, we can see that it is currently sitting at a level of 1.4, which historically suggests that we are in the early stages of a bull market expansion rather than a market top, where the multiple would typically be above 2.4. The specific behavior of USDT inflows shows a new trend, where stablecoins are moving directly from treasury wallets to derivative exchanges rather than spot exchanges, which signals that traders are preparing to open large leverage long positions to capture the next volatility expansion. We must also pay attention to the ascending triangle pattern forming on the 6-hour chart, which is a classic continuation pattern, and the more times the price tests the upper resistance line, the weaker that resistance becomes, eventually leading to an explosive breakout. The volatility index for Bitcoin is currently trading at relatively low levels compared to previous cycles, and this low volatility often precedes a massive move as the market energy coils up like a spring ready to release. We are also seeing a change in the behavior of whale wallets holding between 1,000 and 10,000 Bitcoin, as this specific cohort has added significantly to their balances in the last 48 hours, effectively front-running the expected retail FOMO. The dominance of USDT in the trading pairs on Binance has increased slightly, which usually indicates that traders are moving out of altcoins temporarily to park capital in stablecoins before rotating back into Bitcoin for the next leg up. We should also consider the sharp ratio of Bitcoin, which has now surpassed that of major tech stocks. And this risk-adjusted return metric is what quantitative hedge funds look at when deciding to allocate capital, which explains the relentless bid we are seeing during us trading hours. The WeFoot Relative Strength Index is showing a hidden bullish divergence, where the indicator is making lower lows while the price is making higher lows, and this is a powerful signal that the trend is strengthening despite the consolidation. There is also a notable absence of large sell walls in the order book depth above the current price, which means that it will take very little buying volume to push the price up by another $2,000 or $3,000 in a very short period of time. The correlation with the dollar index, or DXY, is currently at a negative 0.8, which is the strongest inverse correlation we have seen all year, confirming that as the dollar weakens, Bitcoin is the primary beneficiary. We must also look at the UTXOH bands, which show that coins younger than 1 week are spiking, which means new capital is entering the market and changing hands rapidly at these price levels, establishing a new cost basis for a new wave of investors. The liquidation heatmaps are showing a lack of long leverage below the market price, which is positive because it means the market maker has no incentive to dump the price to hunt for liquidity downside. The moving average convergence divergence histogram on the daily chart is about to flip positive again, and this momentum shift often marks the start of a multi-week rally. We are also observing that the premium on Bitcoin futures on the CME is increasing, which shows that institutional traders are willing to pay a premium to get exposure to Bitcoin right now rather than waiting for a pullback. This entire structure is supported by the fact that the USDT circulating supply has just crossed a new psychological threshold, ensuring that there is ample liquidity to support higher asset prices without causing a liquidity crunch. BTC USDT transcribe, we are now shifting our focus to the hash ribbons indicator, which has just flashed a very rare long-term buy signal, confirming that the miner capitulation phase is officially over, and historically, this specific signal has yielded the highest returns for investors who enter the market immediately after it appears. The market structure on the daily time frame is currently painting a textbook bull flag pattern, which is one of the most reliable continuation patterns in technical analysis, and the measured move from this formation points to a breakout target significantly above the $105,000 mark. We must also analyze the market value to realized value Z-score, or MVRV Z-score, which is currently sitting in a healthy zone that indicates Bitcoin is fairly valued, but has plenty of room to run before it reaches the overheated territory seen at the peaks of 2021. The flow of funds into the market is showing a distinct shift from USDC to Bitcoin, which is crucial because USDC is the preferred stablecoin of North American institutions, and this rotation suggests that smart money is deploying capital from safety into risk assets. When we look at the 25 delta skew in the options market, we can see that call options are trading at a premium compared to put options, which means that sophisticated traders are willing to pay more for upside protection than downside protection. The Google Trends data for the search term Bitcoin is still relatively low compared to previous all-time highs, which is a very bullish contrarian signal because it proves that retail mania has not yet arrived, and we are still in the early institutional phase of the rally. We are also observing significant change in the time-weighted average price, or TWAP, algorithms being used by large buyers as the buying pressure is now distributed evenly throughout the Asian trading session rather than just the session, indicating global demand. The daily trading volume on spot exchanges has formed a U-shaped recovery, which validates the price increase because rallies supported by rising volume are much more likely to sustain themselves than those on low volume. We should also look at the pull multiple, which measures miner profitability, and it has just broken out of the accumulation zone, suggesting that miners are becoming profitable again and will stop selling their holdings to cover expenses. The basis spread between the futures price and the spot price is widening in a healthy manner known as contango, which encourages arbitrage traders to buy spot Bitcoin to capture the risk-free yield, and this mechanical buying supports the floor price. We must also consider the liquidity